Hello and welcome everybody to the eToro Quarterly Popular Investor Forum. I'm really lucky today to be joined by some really awesome guests from around the world and also some regular panelists as well that have been on the show previously. In today's forum, we're going to be talking about the markets, but just before I get started, I just want to say that the information that comes from the guests is not financial advice, and we are not employees of eToro. So to get started, I'm going to introduce this awesome panel of guests, and I'm going to start off with two special guests which are new to the forum. First of all, I would like to go over to Davide. If you could please introduce yourself.
Hey guys, very happy to be here, by the way. As I was saying before, I couldn't think of a better way to spend my Saturday morning than talking markets with you guys. But yeah, that aside, my name is Davide Marcotti. I go by Dafne17 on the platform. Some people butcher it and say Daphne, but technically it's Italian, so it's Dafne17. You can find me there. I'm having a blast on eToro for the last few years. Macro investor mainly, so focus on inflation, crypto, macro trends, secular trends, as opposed to swing trade. Yeah, I've been in the market since I was 18, so that's 14 years. I do have a day job as well as an executive at one of the largest consulting firms in the world. I do travel the world to advise banks around the world. Right now, I'm in Ireland in my corporate apartment. As you can see, it's probably too beautiful for me to be able to afford it. Yeah, so maybe not blast.
Thanks very much, Davide. And over to you, Neza. Could you please introduce yourself?
Hi all, thank you again for inviting me. My name is Neza Molk, and you can find me on eToro as Nezatron. I joined the platform in 2020 and I became a popular investor a year later. I'm focusing on value investing, but before actually focusing on value investing, I was investing more in growth stocks, but then I switched to value investing. Currently, I have 25 assets in my portfolio, and I'm investing in stocks and ETFs, and I don't hold any crypto assets. Besides investing, I was studying biotechnology with my main interest in human genetics and genetic diseases.
Thank you very much, Neza. And over to you, Zach. Could you give us, you're a regular panelist, but could you, for people that haven't listened to this forum before, could you please introduce yourself?
Yeah, I'm Zach. I've been with eToro maybe 7-8 years. It's been fun. It's been a ride. I'm close friends with Steven and Mark. We talk all the time. So happy to be here again.
Thanks very much, Zach. And over to you, Amar. Can you introduce yourself?
Yeah, my name is Amar. I'm 𝗲𝗂𝗁1234 on eToro. So my strategy is basically to invest in high quality companies for the long term. That's what I've been doing for the last 5 years, I think. I have a YouTube channel as well. It's called Investing Education. I have a project there that I call Project 1 Million, where I'm trying to grow my life earnings into 1 million. So if you're interested in following me along this journey, you can also check that out.
Thanks very much, Amar, and good luck on your quest for the 1 million prize at the end of the tunnel. So over to me, I'll introduce myself. My name is Stephen. My username on eToro is 𝗲𝗂𝗁𝗔𝗍𝗔. I have been an expatriate, kind of traveling around the world for different kind of corporate jobs. A couple of years ago, I became a full-time investor, and I have been investing actually for about 15 years, but I tend to invest in a number of different asset classes, such as stocks, as well as crypto, and also some commodities. And yeah, so I'll get started and kick off the forum. So a quick question for the panelists. I thought we'd start off by going over some of the key things that happened in Q2 2023. I think it's been a pretty good quarter for most people involved in this chat and for investors on eToro. The markets have been performing pretty well, but I want to go over some of the key things that happened and talk to the panelists about it further. I'll get started, I think, with you, Zach. How did Q2 go for you? And was there any kind of key things that happened that stand out for you over the last quarter?
Q2 was good. Q3 has been absolute shit, so that's fun. Just 1 month's difference, but yeah, so I think the key thing, if you look at any of the investors on even eToro or whatever, it's the difference between the S&P and the rest of the market, so the top 7 market cap weighted. So the way I measure it is I look at the equal cap weighted index, which is called the RSP versus the SPX. So you can see that it's actually come down to 2022 lows. So that means the top 7 stocks are really just dominating the market completely and utterly. So it's scary. I hate seeing that. When I see that, I get a bit fearful, but we'll see. It's interesting. I know Amar has a lot of Amazon and Meta and shit like that, so maybe he can comment on this move.
Yeah. Zach, do you think it's going to make a difference, the announcement of the recent rebalancing of the NASDAQ? Do you think it's going to make a considerable difference in the future?
Personally, I don't think so. I think the reason why it's gone so haywire is just because people just like passive investing. So whatever they do, they just buy the basket. So they're just going to keep buying the basket and keep buying the basket. The rebalancing will help increase the market breadth a bit. But when it comes to the SPX, it's a bit different because NASDAQ is mainly tech focused, right? So there's a lot more concentration in that risk. And the stocks that have gone up have really just been tech stocks. So it's still scary, I think, if you're on the NASDAQ.
Yeah. And a limited amount of tech stocks as well. And
yeah,
it happens to be the ones that are the highest weighting in the NASDAQ. Yeah. Okay. Amar, while we're on the subject of tech stocks, you have quite a few tech stocks in your portfolio. What do you think has been driving their growth over the last quarter?
Yeah, I do have quite a number of so-called tech stocks. I don't really view them as tech stocks. I invested in them because I felt their competitive advantage was very strong. It's hard to compete with Amazon, it's hard to compete with Meta, and it's hard to compete with Google and some of these other companies that I have in the portfolio. So far this year, it's been quite a turnaround. I remember at the start of the year when we did this, my portfolio was down about 37% last year, and this year is up 37%. So that's quite a big difference. Although I haven't broke even yet over that period, but it's been going good. I think stocks like Meta have done extraordinarily, and it still seems like the future is very bright for some of these companies. But it's a different environment now. Interest rates are at 5%. During the last 5 years I've invested, I never had interest rates at 5%. So you're getting a risk-free amount at 5%. That kind of makes you think more carefully about the kind of investments you want to make going forward. If the market rises further, I'm looking to take some profits. Let's see how it goes over the next few months.
Yeah. No one got poor taking profits, Amar. Yeah. Neza, how about you? How did the last quarter go for you? I know that you, as you mentioned, you're a value investor. How did the last quarter go? And was there any key things that kind of drove that performance?
For me, same as for everyone else, Meta performed very well for my portfolio. I bought it when I thought that it was undervalued, and I've been holding it ever since. And as you all know, it performed very well in past quarter. Otherwise, I also invested some more in some of the European companies that I have. For some of them, I thought that the valuations were good, and some of them are leaders in their sector. So I'm turning more into that. I know the technology is performing very well, and as Zach mentioned, most of gains are concentrated in 7 companies, and that is scary because all of money goes there. And if you compare how well is the index performing without those companies and with them, it's really hard to see. And I'm looking forward to see how the earnings that are coming in following weeks what the consequences of them they will be, because I think that we might see quite good numbers, but I think that people won't be satisfied by them, that the numbers won't be that surprising or good enough for investors.
So you're worried that they might not be able to sustain the current gains because of the future earnings?
Yeah, I think that maybe we can see good numbers, like positive, but expectations are higher than companies can actually perform.
Yeah. Also, we've had that AI bubble that's popped up over the last kind of couple of months. And any company that's mentioned AI in the earnings reports have seen the stocks spike up. So it'll be quite interesting to see how that plays out as well, and whether some of the hysteria around that will start to die down. I think everybody agrees that AI is probably going to be a really innovative and cutting-edge technology in the future, but sometimes expectations overdo the actual reality of the situation and where we are now. Thank you. Thanks very much, Neza. And over to you, Davide. Last but not least, how did last quarter go for you?
Yeah, look, Steve, my portfolio is very similar to yours, right? If we actually compare the two, we're very much centered around what we believe is the future of the world, right? So technology as well as crypto, etc., right? So with that in mind, obviously we did very well because that's been the theme this year. But risk on assets are back on the main dish for lots of hedge funds around the world, and where the liquidity is going as well. So yes, we did very well, but that comes with a consequence, right? So which means that last year we didn't perform as well. But so we are recouping the losses from last year, but which is great to see. And to be honest, I think this rally can continue. I think this rally can continue because of various reasons, but I don't want to jump the gun here. But yeah, I'm fairly optimistic. Look, I know they sound smarter to be pessimistic about the markets, but in all honesty, I'm a long-term investor. Even if it goes up a little bit more, I don't think I'm going to be taking profits, because then it begs the question, what do you do with your profits? Do you reinvest, or do you leave it there, or do you go short?
Yeah.
Like, don't know. For now, thesis is still intact. Secular trend is still in play. I'm happy with the way it's going.
Yeah, I think I agree with that. And sometimes just being out of the market, sitting on piles of cash, if you miss some of the key growth days of the year, then you can miss out on potentially lots of gains in the future. Yeah. Did you do anything, Davide, to your portfolio coming into this year on the back of obviously what was a very disappointing year for everybody last year? Did you make any changes to it in preparation?
Not necessarily, no. Last year I was just waiting patiently for this year to happen, basically. So I've been accumulating quite a bit actually throughout the whole last year, and I was telling, not advising, but I was telling everyone that's what I was doing in my private portfolios. I didn't force my copiers to do the same by making deposits. But yeah, look, it's been a good year to accumulate. I only just wish that this bear market would continue for a little bit longer, because I wasn't done accumulating. I'm one of those guys that doesn't keep that much cash on the side. So whenever I get paid, whatever I can afford to invest goes into investing every month. I just drain my accounts. I live on the edge because I'm in a position to do so. So yeah, I just wish that it lasted for longer, in all honesty, mate.
Thanks. Thanks, Davide. Yeah. Okay. And Zach, obviously it's been a really great start to the year so far in 2023. Have the markets surprised you on how they've performed so far at the beginning of this year, obviously compared to what happened last year? And do you think that this rally could continue for longer? Or do you think they've got the potential to plateau from here to the end of the year? What's your opinion, Zach?
I don't know, man. It's so hard because what's the reason for the rally? I don't know. Discount rates are like 5%, right? But if you're a value investor, you look at it, you're like, okay, discount rate is 5%. If you discount all the cash flows from the future by 5%, are you at fair value more than a year ago? Unless your earning expectations have gone up, which they haven't. But what are you banking on? You're just banking on spread compressions, which I really don't like spread compressions because there's no fundamentals backing it. But yeah, it's hard. I'm surprised the market rallied this hard. I am genuinely surprised. After all, I think last year, the last time we came on this forum, we were all talking about recession. What happened to that? Now no one's talking about recession anymore. So I don't know, man. It's too hard. It's really hard.
Yeah, I'm wondering if it's a lot of it is to do with the reversion to mean, right? So obviously last year there was so much fear in the market that prices became probably more depressed than they should have been in the first place. And then I think with the expectations that interest rates might be paused sometime in the future, and that they could change the monetary policy again to do quantitative easing again in the future, whether that's just brought stock prices back to the mean, because a lot of the actual earnings haven't changed a significant amount. So do you think it could be that, Zach? Do you think I'm on the right lines there?
It could be, man. But then again, we're near all-time highs, right? If you're at all-time highs, you're generally not the mean.
Yeah, but I guess as the opposite happens, when there's loads of fear in the market, the prices go below mean. And then when there's a lot of optimism in the market, maybe they go above mean. Yeah, it'll be interesting to see what happens the rest of the year, whether we come off these. I think we're only about, what are we, 5% away from the NASDAQ all-time high, or 6%, something like that. But yeah, we're not far off all-time highs at all. But again, driven by just probably a few stocks within that NASDAQ. Yeah. Neza, how about you? What do you think driving this rally on what's happening? And are there any things that you're a little bit worried about on the horizon which could potentially derail the rally?
I think that, yeah, technology and AI are main drivers of this rally. And I wouldn't be surprised to see correction in following months, because I don't think that it is actually sustainable. There are some positive indicators that show us that US economy is still performing well. We see that inflation is falling, and we see that labor market is still strong, but on the other hand, the manufacturing index and inverted yield curve are not indicating that well. And I don't think that companies can really perform that good at interest rates that are so high. So I wouldn't be surprised to see correction, really. Yeah. Especially at...
Yes. And do you think that the interest rates may be held for a longer period of time than the market's actually expecting at higher rates? Or do you think that they might have to change the policy?
I'm afraid that Fed will keep interest rates higher for longer, because I believe that they are looking at what happened in the past. And if we take a look at 70s, the inflation came back again. And I think that they can be afraid of this scenario. So I think that they have a very difficult job, and it's almost impossible to execute it perfectly. And I think that we might see interest rates higher for longer.
Yes, yes. I had a lot of criticism of the Fed in the early days when inflation started to take hold. And inflation started to go up, and then they were saying, obviously, they thought it was transitory, etc. So I think they made a lot of wrong moves at the beginning. Yeah. But actually, I have a little bit of praise for the Fed these days, because they have increased the interest rates and they've stayed resolute to their message. And they've always tried to, either through policymakers doing speeches or whatever, they've always tried to let investors know really what they're going to do. And they haven't really deviated from that, what they were trying to achieve. And if we actually look at inflation, every month since we hit peak inflation, we've seen a reduction in inflation without any spikes, any speed bumps to, it going back up again. So I think they've done pretty well. The only worry is, could they overcorrect by being high interest rates for much longer and holding them or increasing them further? Could it go the other way, where it goes below the Fed's target of 2% and they have to change course pretty quickly? Davide, do you have any thoughts on that? What are your thoughts on the kind of interest rates, and do you think possibly they could overcorrect?
Look, that's also why we're having this rally, right? So inflation wasn't as bad, I guess, as they anticipated. So the Fed didn't want to take any risks, right? So they just hiked rates as much as they could, very fast, very quick, right? They destroyed the economy, almost sent the whole financial system into bankruptcy, right? So we have seen that across the board with many financial institutions across the US as well as Europe, right? So that was a little bit too much. Now they've been having some tough conversations internally to say, guys, if we raise another time, something else is going to break. And at that point, obviously, you need to combat inflation, but to what extent and at what cost, right? So you need to potentially pause these rate hikes. Now we're looking, the latest CPI read is about 3%, right? So we're literally very close to the target, which is 2%, and it's been falling month and month, right? For many months consecutively because of various reasons. And I think it will continue to fall. There is some sticky inflation, obviously, that's never going to go away. Honestly, 2% was just a number that they agreed upon internally, but it could be 2.5 to 3%. It doesn't really change that much, in my opinion. And I actually think that in the next few years, we could see some deflation as well, because if you look at the debt in the United States, personal debt as well as corporate debt, it's at all-time highs, right? And they're paying very high interest on that debt, again, because of the rate hikes. So they will have to lower spending. If they lower spending, then businesses have to lower their prices. If they lower the prices, then inflation comes down. And then with the help of technology, AI, robots, etc., then we could actually see deflation. And in a deflationary world, you have to lower interest rates. And then massive rally again.
Yeah, I think that's possible. I think that's possible as well, Davide. I think the main driver of the inflation in the first place was obviously Ukraine, Russia, and the increasing of commodity costs. I think they come down in a major way, and I think that's probably why we saw the deceleration of inflation happen very steadily over time. My little concern is around the housing and shelter, which makes up a large part of the CPI reading. And it takes a long time for that to kick in the economy, right? So it takes quite a long time for people to think about getting new mortgages, moving houses, for their terms to end on their mortgages, etc. And I think only now we're seeing a kind of reduction in the kind of CPI around shelter and accommodation. But that is majorly lagging. I don't know the exact amount of time, but it's probably 6 months, 8 months lagging indicator. So I don't know in 6 or 8 months' time whether that might have a significant difference on CPI and whether we could actually go below that Fed target. I think it's definitely possible.
Yeah, no, it is 6 months, as you said. It's a lagging indicator, shelter, and then you could even think of rent for businesses, right? So commercial real estate. Their lease is coming up for renewal this year, next year. What's going to happen there? Like, it's an interesting scenario that could play out in the near future.
Yeah, and who's going to get a new mortgage at the moment, right? Unless you have to for whatever reason, the mortgage rates are not attractive really in any countries at the moment to be moving house. So that could definitely have an effect. Yeah. Amar as well. What's your views on inflation, CPI inflation? Do you think we're pretty close to max rates? And do you have any concerns that that either inflation could spike again, or we could go into inflation going below the Fed's targets? What's your views?
I think inflation is quite hard to predict. The worst thing that can happen is there's a escalation of the war, or there's another war that happens. I think that's the worst thing in the world to happen. Some food prices still seem pretty high, and they still seem to be going up. I think there was a export ban by India on rice recently, and then the wheat prices has also been going up because of the deal Russia and Ukraine had falling through. And they're not letting wheat crops be traded across that region now.
Yeah.
So
yeah.
Food inflation could still go up. In terms of interest rates, okay, in the US next year is an election year, right? So
yeah,
usually in election years, I think they want the economy to be as strong as possible, right? Especially the incumbent president. So that might be a catalyst to cut rates. That usually makes the economy stronger. So that could be one reason interest rates could go down.
Yeah, actually, that's a very good point, Amar, because, yeah, as you said, the elections are coming up. And one thing that they do like to do is cut rates, do quantitative easing, etc. The people tend to like it. And they don't really see so much the inflation stuff. They look more about stimulus and the monetary increase, etc. Do you think that the upcoming US elections are going to have any significance on the future of stocks coming towards the election time? Okay, so
I actually have a chart for you, Stephen.
Yeah.
I'll send it over to you, and it shows, like what the market does depending on the candidacy and the president, right? And to be fair, it's literally one way, and the way is up because that's the stock market for the last 20 years for the US. So it shows that there is really not much of a difference whether it's liberal democratics. It's literally almost the same. And I show it to you. It's actually quite interesting.
Okay. Yeah, that is pretty interesting. I did hear that the common rumor around is that markets tend to do better under Republicans than Democrats, but I've seen a similar, not so much a chart, but I've seen a similar kind of review of the differences between the parties. And as you said, I don't think that there is a major difference between who actually gets elected. It's more about what's happening in the economy at the time.
Exactly. Obama's presidency was great for the markets. Literally one of the best. Yeah.
Yeah.
Trump's was as well, right? Like it was really good for stock markets. Not the beginning because everyone thought it was terrible, and then just suddenly just reversed course and took off, right?
Yeah, that's literally what happened. So you started a little bit lower than expected, but
so what your chart says is that regardless of which president, it will go up. Is that right?
Yeah, that's the thesis. That's what the data suggests.
Oh, interesting.
Yeah,
I think
from 1955. Sorry,
I think the markets most care about stability. regardless of who the president is, I think markets tend to do pretty well when there's stability overall in the country, and obviously no wars, the economy's doing quite well, etc. Yeah, I think that's probably the most important. Okay, and I wanted to move on as well to the dollar, Zek. And I'm going to start off with you, Zek. And I know that you still have your play in US dollars versus the Switzerland currency, Swiss franc. What are your views on the dollar? Because the dollar's obviously weakened pretty significantly this year. It was obviously very strong last year. First of all, what do you think's driving the US dollar to weaken in the way that it's weakened so far this year?
Okay, I should give context to this. For real context, I am down about 7% of my portfolio just because of this one trade. So -7 for one trade, and this is the freaking US dollar. So it is such a freaking painful trade. It's hilarious. The reason why it's gone down, I have no answer for it. Like zero at all. The thesis for me was if you go long the dollar and you short the Swiss franc, you get the interest carry in between, which is because the interest rates in the US are higher. And the interest carry, when I did the calculations, was about 17%. So I thought, hey, that's a great trade. So I'll just stay in it and see what happens, right? And now it's absolutely just getting my face ripped off. But yeah, so Swiss franc is really strong now, and so is the euro. They tend to work in tandem. And should those currencies be that strong, I have no answer for you why they should be that strong. Do I think Europe is going to do well in the next year or two vis-a-vis the rest of the world? I do not think so. Neza may disagree with me vehemently, but I don't see a way that Europe is going to do better in terms of valuations. I don't see a world where the liquidity is going to be better because there's the TLTRO, which is coming off. So there are a lot of things, a lot of headwinds in Europe, like a lot of headwinds. But somehow the euro is still stronger because everyone's shitting on the US dollar and the BRICS currency and all that, like the news of that, it just drives it lower. But I have no views, man. I have no idea why it's lower, and it's just been a painful trade for me. That's all it's been.
Okay. I have some theories. I don't know if they're correct or not, but these are my theories. I think one is, I think the US dollar has weakened, and I think that is because last year they were increasing the interest rates much faster in the US than in other countries. So that caused I think that caused the US dollar to appreciate a lot more. And I think now that the expectations are in the US that we're fairly close to peak interest rates, whereas in the rest of Europe, I think that they still got some way to go. Inflation's still really high in Europe. So it probably means that they're going to have to increase interest rates for longer in Europe than they would in the US, which effectively weakens the US dollar. And then my other theory as well is obviously last year it was terrible for markets, right? Absolutely terrible for markets. So I think people were potentially putting money, saving and using the US dollar as a safe haven and putting money on the sidelines. And I actually think a lot of that could be a reason for why the stocks are higher this year as well, because I think a lot of money that was on the sidelines has come back into the market as we've gone a little bit risk on. So I think they could explain why the US dollar's weakening, but yeah, who knows for the second half of the year.
Which is another fascinating point, right? Like the US dollar's appreciated a lot against European countries, so Western states. But against the Asian currencies, my gosh, the dollar is so strong. Against the CNH, against the Malaysian ringgit and all that. So is there a bipolar world that we live in? Like, why is the US dollar strengthening against these but weakening against the others? I don't know, you're right. Maybe it's an interest rate thing. They can stay higher for longer. I don't know, man.
Yeah. And we also got to remember that the US dollar is the world reserve currency for now, right? So there's always going to be a demand for the US dollar. But I do think a lot of it's interest rates. Neza, what are your thoughts on the strength of the US dollar?
It started falling right after the inflation came out lower than the expectations. And I think that last year we also had a big effect of Ukrainian war and energy crisis in Europe. We saw really low euro and pound, and after winter was not that cold as normally is in Europe, it was better for European markets, and I think that affected euro and pound as well.
Yes, that's true. That's true. I think there was massive effects from the Ukraine-Russia war that's found its way into the economy, and it definitely had an effect on currencies as well. Yeah. Okay. Ammar, but before we move on to the next subject, do you have any comments or anything on the strength of the US dollar?
No, I think I'll probably agree with what you said on the theories on why it's weakening. I'll just say one more thing, because I live in Singapore, so Singapore has a strong currency, the Sing dollar. So if you compare the US dollar against the Sing dollar over the last 10 years, it's always been depreciating against the Sing dollar. And I think it's mainly due to the fact that Singapore manages its budget better, it spends less than it earns, basic financial discipline in how it spends money and in terms of how it collects money. I don't see that changing in the US. I think they raised the debt ceiling, I think, a few months back. It looks like they're going to continue spending probably more than what they collect. And those kind of trends probably will cause an overall weakening of the US dollar over the long term.
Yeah. Thanks, Ammar. And I think the reduction of inflation as well will do a lot of good for some of the companies that deal with physical products, right? Where if they have to buy physical products from factories, etc., the raw costs of materials have been extremely high. And there's been a huge amount kind of inflation, and they've had to pass that on to the consumer. And I'm hoping as they reduce that, the inflation reduces, that some of the costs can start to normalize a bit. And I think it will be pretty good for companies who are reporting earnings, who actually deal with selling physical products that need raw materials. Yeah. All right. Thanks very much on that. I just want to go on to a really exciting subject for some people on the panel, and that is crypto. Crypto has had a really great start to 2023 on the back of what was a really tough year and a very long bear market in crypto. Bitcoin is doing extremely well, and it's hovering on that $30,000 mark from the low of the bear market at about 15,500, somewhere around there. So it's had a huge rally back, and it's actually performing really well. It has there's quite a high Bitcoin dominance rate as well at the moment compared to other altcoins. I just wanted to talk about this in a little bit more depth today, because I think that there's some very exciting things coming up on the horizon, and I wanted to talk over this with our guests. And that is one of the key subjects that's happening at the moment, obviously, is that the Bitcoin halving is due, I think it's in April or May 2024. So it's coming up in less than a year. And we also are seeing the application of some of the largest hedge fund managers, such as BlackRock, Fidelity, and many others, have actually raised and done applications for Bitcoin spot ETFs, which could be a massive deal in the market, and we could see big inflows of money. into Bitcoin potentially next year if those are approved. So I wanted to get the views of the panelists, and I think I'll start off with you, Davide, considering I know that you're really into crypto and it makes up a big part of your portfolio. So what are your thoughts, first of all, on the halving and also on the Bitcoin spot ETFs, and what could that mean for Bitcoin?
Yeah, and to be fair, yes, I am passionate about crypto, Bitcoin, Ethereum, etc. But my portfolio is only 15% allocated to crypto, and it is now, which means that technically at the beginning of the year, because of the massive growth in the crypto space, then we were probably hovering around 11-12%. But yeah, look, as you said, the halving is happening next year, and it's one of my favorite times of the liquidity cycle, because it seems to be coinciding with the monetary cycles, right? So it's not just about the halving to say, okay, the rewards that are given out to the miners get slashed in half from 625 to 3 point whatever it is. It's almost pi, right? So I think it's going to be close to that number, actually. It's pretty funny. Yeah. So obviously there's going to be fewer Bitcoins in circulation, less selling pressure, etc., and therefore price tends to appreciate if the demand stays consistent, right? It's just a simple rule of demand and supply. So yes, I am very optimistic going into next year for crypto, simply because historically it has been a very good time, right, to put your mind to work. Will it happen again? We don't know for certain. Nobody knows what's going to happen in a month or 2 months, right? But what I do believe is that over the long run, there is no way, or there is a very low likelihood that Bitcoin is not going to dominate the financial system, right? So that's my personal belief, right? But there's so many things that have happened recently, like even the US judge saying that XRP is not a security. BlackRock, Fidelity, 𝗲𝗁, all of these huge financial institutions that manage trillions of dollars that are applying for a Bitcoin spot ETF, as you said, right? So these applications have been acknowledged by the SEC, right? So it's just a matter of time, right? And they're all going to be coming into this space all at once, because the first one to get an ETF approved gets the majority of the market share for those people that have been waiting on the sideline to invest in crypto using a regulated form of investment, right? Because maybe they didn't want to open up an account with an exchange after everything that happened last year and all of the issues going on with Binance, etc. Maybe they don't necessarily trust exchanges, they trust their own broker, and they want access to their asset class through their own broker, and they don't want to take too much exposure going into things like MicroStrategy or miners, which is a proxy for investing in Bitcoin, but it comes with additional risk, right? So the Bitcoin ETF is just the perfect way to get exposure to the asset class without bearing additional risk than just the price risk, right?
Yeah.
So yeah, I'm very optimistic. I don't want to steal the show from everyone.
Yeah. I think access is probably the right word. And I think big institutions, they don't want to mess around with crypto exchanges, right? And they can't really when they're talking about the amount of money that they're going to inflow.
Yeah.
Like pension funds, corporate companies, they're not going to go on Coinbase and buy massive amounts of Bitcoin ever.
Comes with risk, right? Counterparty risk, and then self-custody. If you lose your keys, people that manage these funds, they don't fully appreciate, or maybe they didn't fully appreciate what self-custody means, right? What's your public phrase? What's your secret phrase? What's your seed? It's just too many headaches for the normal investor to be exposed to this asset class, right?
Yeah, but I don't want to have too much hopium on it, but I do think it's a massive development. And I do think it's very unlikely that someone like BlackRock hasn't been tipped off already by the SEC to say that if they put in an application in this certain way, including this type of information, then it's likely for it to be approved, because they have something like a 99.5% approval rate. I think they've only ever had one ETF that's been turned down in the history of BlackRock.
Over 575. So yes,
Yeah.
it's insane. They've got a pretty decent track record.
Yeah. Yeah. So a very small percentage of that, I'm not talking about a huge percentage of that, but a very small percentage of the assets under custody could make a major difference to the price, especially if supply has been restricted slightly by the halving.
Can I say one last thing, right? So I wouldn't be too surprised if Gary Gensler didn't finish his mandate, right? I think he's got 2 more years ahead of him, right? But after everything that happened with FTX, Celsius, BlockFi, literally most of the financial institutions that were based on crypto lending over the past year have had some sort of liquidity issues / fraud / bankruptcy. I was involved in one of those myself. I've lost quite a bit, still waiting for liquidation, but it's the risk of the game, right? It's the risk of being early. It's the risk that you must be willing to take. And that's why I always say invest what you can afford to lose, right? I had my crypto stash with a few of the brokers. I do use pretty much all of them. So yeah, it's risk.
Okay, thanks, Davide. And Zach, how's the landscape of crypto looking? I know you work in the crypto industry as well. How's everything looking in terms of, can you see concerns around regulations, for example? Do you see a lot of excitement around the Bitcoin ETF? What are you generally hearing and seeing on the ground?
I'm seeing a lot of people lose their jobs, unfortunately. The best I can see is a lot of optimism around the ETF. In terms of technology, there's not much being built, not much. The account extraction, the EIP 4336, I think was interesting. It's supposed to allow like regular investors to come into the market, but it's still not tested. So a lot of things are just not tested yet. So is Ethereum developing, becoming more interesting? Definitely. Is it there yet? I don't think so. So the ETF is not the only excitement we see. And if Steven, myself, and David can convince Neza and Amar to buy the Bitcoin ETF, I think we'll be very successful today. We have a very good thesis. Steven will start sharing with you this thesis about the Bitcoin ETF. Go, Steven.
I think I've shared quite a lot already so far on this call. I just generally think that there's going to be a lot of inflows into Bitcoin. Like, I think with the rest of the altcoins, I think they're just further out in terms of the risk curve. There's a lot of uncertainty around regulations, what's a security, what's not a security, etc. And I think that kind of makes people nervous. But I think basically from the SEC, we've almost got a green light from the SEC that Bitcoin is not a security and that it acts more like a commodity. And I think that's going to give lots of people access. But on the one downside, I would say is that hedge funds behave like before, everything was retail investors. The majority of money was coming in from retail investors, believers, whales, etc. But the only kind of downside and the thing that I think might be a little bit of a risk is the behavior. So there'll be a lot of inflows of money into Bitcoin, but the behavior of hedge funds is very different to retail investors who are strong believers in Bitcoin, etc. They rebalance their portfolios periodically, etc. I think that they could behave, Bitcoin price could behave very differently once there's a large portion of hedge funds, pension funds, and other things involved.
It's a problem for the future, right? If we actually get so many institutions to actually participate in this market, there is not enough liquidity, right? So the price can only go bonanza from here. That's what I've been saying on my feed, right? It's going to be a good problem to have in my mind, Bees.
Yeah, we've also got to look at the diminishing returns as well, right? So each cycle, there tends to be diminishing returns compared to the previous cycle. And that's very simple really to understand, because what happens is as the asset class matures, it takes a lot more money to move the price. But that goes not just on the upside, but usually on the downside as well. It might not seem it after the big bear market that we just had, but actually that was less than the previous bear market before. Yeah. So Amar, have we convinced you to buy some Bitcoin?
Not yet, I think. I'm not sure about Neza, but I don't have a strong view about crypto. The SEC tried to ban altcoins when they sued Coinbase, basically. And Bitcoin seems to be the only crypto that's invincible to the SEC. So in that sense, it seems like it has an edge over other cryptos. My exposure to Bitcoin is through Square, or it's called Block now. So the founder of Block, Jack Dorsey, is a big Bitcoin proponent, and so he wants to set up a new system, I think, that's involving Bitcoin as part of his company's operation. And then I have PayPal as well. PayPal allows crypto trading on its platform as well. So this is probably the extent of my exposure. And then I also have Ethereum. I think Ethereum probably has more potential over the long term if the SEC doesn't decide to sue it as well.
Yeah. Thanks, Amar. Okay. And Neza, is Bitcoin too volatile for your portfolio?
I can't really give you my opinion on Bitcoin or on crypto, because I never really got into it. So you haven't convinced me yet, but I won't say that I won't change my mind anytime in the future. Maybe I will go into it in a few years, but not right now.
Yeah, it's very complicated, and it's a bit of a minefield to get into, and it takes a lot of time to really understand the asset class, but also understand kind of the movements of the market. And I think Davide and Zach will agree that however much you learn, you never really learn everything, and there's always surprises in crypto. But that happens if you're expecting higher potential returns. As Davide said, you have to take the risks involved in that. Okay. All right, excellent. That wraps it up on crypto. Just to end the show today, I thought we'd come up. We always try to do like an innovative last question that's maybe a little bit fun, but also a little bit informative for the listener to understand some of our viewpoints on specific stocks. So this specific feature, I really wanted to ask our panelists to name one stock that they think could do well for the rest of 2023, and also explain what the tailwinds are behind that stock doing well, and also to bring up some of the risks that could happen as well on that stock as well. So I think I'll start off with Amar, if that's okay. If you could please tell me your one stock and its tailwinds.
Okay, the stock I'm going to talk about, I've talked about it before on this forum. And the last time I talked about it, it fell by 15 to 20% because it released bad earnings. That's my caveat. But I still haven't lost hope in this stock. So the stock is called Teladoc. So it's at its 52-week low or around there. It's a telemedicine market leader. It trades at less than 2 times sales. So it hasn't really participated in the market rally this year, right? So the big tech has really exploded to the upside, but stocks like Teladoc have not really participated yet. It recently announced some AI partnerships, so it's getting onto the AI bandwagon with Microsoft. That could be one catalyst for it. It could also be an acquisition target. It looks really cheap, especially to some of these, for these big tech companies. If Microsoft can buy Activision for 69 billion, Teladoc is just 3 billion or so. It's a possible acquisition target as well. And a lot of these big tech companies, they do say that health, wellness, this is a focus of theirs. It's a very important area they want to develop in. Apple is moving into this area aggressively as well, with its Apple Watch and all the health features. You know, you could see Teladoc become an acquisition target. And then you have the macro trends. People are living longer. People are more focused on their health. I think that could benefit Teladoc in the long run as well. So the risk I see are that there's been some poor execution on the part of management. It made a very big acquisition during the pandemic, and then it had to write off a lot of that value because it didn't really turn out that well. It didn't integrate into the existing company that well. And there's also a lot of stock-based compensation that's doled out at this company, so that erodes the earnings of this company. So it's breaking even on a cash flow basis, not on a earnings basis yet, but it's still growing. I expect it to continue growing in the coming years.
Okay, thanks, Amar. And Teladoc, do you think it, obviously in 2020, when the pandemic happened, it rose very fast because there was a lot of focus on health, but also people couldn't go out and see the doctor, etc., as easy as they could do before. Do you think it could get back to those previous levels, or do you expect kind of something in the middle?
It's probably not going to rise to the same level as in the pandemic when we couldn't see a doctor even if we wanted to.
Yeah.
Based on my personal experience, I don't like going to the doctor. When I want to be absent from work or something, I like to just call the doctor on my phone and get medical leave. It's so easy for me to do that rather than going to the doctor and waiting there in line and then getting my medical leave that way. So it is still working for me. I'm still using it. So I think it could grow in popularity in the future.
Yeah, especially if you just want a repeat of previous medication or just a checkup. Yeah. Okay, thanks, Amar. That's a really good point. Neza, do you want to go over your one stock and its potential tailwinds?
So my stock might not be as popular as Teladoc, and usually I'm not looking forward to next 6 months, but really on longer run. For now, I decided to bet on 𝗏𝗏𝗏𝗏. 𝗏𝗏𝗏𝗏 is not that well known. It's a Swedish company that is producing different solutions for motorhomes, marine boats or so. They are producing windows, fridges, a very broad spectrum of products. And if economy performs well, I'm expecting that their sales will continue to grow. I like their evaluation at the time that I bought them, and they recently released their earnings report, and after that the stock jumped. So if there won't be any surprises on the market, I'm expecting them to grow further.
Okay, so you think they have the potential to grow the market share?
Yeah, I'm expecting so. Otherwise, if the economy won't perform that well, and if there will be some major events that will be affecting the market, I would expect Amgen that I'm holding to also perform well. But I might be concerned about their recent acquisition that is still ongoing of Horizon Therapeutics, and yeah, that might be the risk involved.
Okay, all right. I hope that does well for you, not just in the short term, but in the long term, because I know that's what you're most focused on, Neza.
Thank
you. Okay, over to you, Zach. What is your stock? Are you going to surprise us with a new stock?
I was going to do something fun, but since Neza and Amar are not convinced, I guess I have to do Bitcoin. I have no choice. they forced my hand.
Okay, go for it.
Okay, so I'm gonna go for it. So the thesis is Bitcoin long. Reasoning is very simple. We already talked about the ETF approvals. So if you think about ETF approvals, let's just say 3 of them get approved. Grayscale Bitcoin Trust is currently $4.9 billion. So let's just say 3 of them get approved. You're gonna have to, let's say, I don't know, just to be simple, it's like 300 million to start an ETF, right? So you have to bet something like 10,000 Bitcoins. So you have to buy 30,000 Bitcoins to come off the market and go into the ETF if you just want to start the bloody ETF, just to start, yeah? And now you know that Bitcoin is circulating supply is about 13.1 million, and then now you know that some of the keys have been lost and stuff like that. So the actual circulating supply is actually quite small. So if you think about it, as long as these ETF guys just get approved and have to freaking buy the Bitcoin from the market, Bitcoin has to go up. There is no choice because supply is just not there. So that's a value investor's guide to Bitcoin investing. Have I convinced you? No, okay, I give up. Stephen, you're up.
I agree with you on the supply as well. I think a lot of people who were speculators that wanted to sell, I think they did during 2022 and early 2023. So I think there's going to be a big supply shock. Oh, quick question before I move on to the next person. Can you just explain your thesis around you going for Grayscale instead of buying Bitcoin direct, and just to explain that thesis to the listener?
Yeah, so I'm a Bitcoin, not your keys, not your crypto. I do have my own hardware wallets. I prefer to hold it myself.
Yeah.
The only thesis behind that is they're gonna convert this into a spot ETF. If they don't, the other ETFs are not gonna get approved. Yeah. So now it's trading at discount to fair value. So I think the discount is 30%. So once that gets approved to become a spot, what happens is the arbitrage goes away. So if Bitcoin goes up, I rather hold the ETF because now I have a little bit of safety. That's just the regulatory arbitrage that you have. That's 30%. 30% is really good. If it doesn't go up and Bitcoin doesn't go up, stays the same, I make 30%. If Bitcoin goes up, I make 30% plus however much Bitcoin goes up by. And if Bitcoin goes down, I still make the less than 30%, but still some money.
Yeah.
I prefer to be long the Grayscale rather than the Bitcoin itself.
Yeah, and there's a 2% charge, but it's pretty insignificant compared with the arbitrage opportunity. Yeah.
Yeah, exactly.
Okay. I can feel Neza's and Amar's minds have just been blown. Yeah, it's a lot of information to absorb. So we'll move on to Davide now. And Davide, what is your stock that you
Stephen,
want to...
it's funny because I got asked this same question a couple of years ago. I was doing a podcast with the eToro guys, right? And I actually said NVIDIA, right? For various reasons, including the metaverse, and they were helping the crypto market with miners, etc. before Ethereum moved to proof of stake. Now it's with the focus on AI, but it's the next thing. There's going to be quantum computer, like everything, right? So it doesn't really matter what the current trend is and what's fancy now for NVIDIA, right? So in a few years' time, there's going to be a new thing, and NVIDIA is going to dominate the markets again, right? But I'm not going to be pitching NVIDIA, although it's one of my largest positions in my portfolio. I also wanted to do something similar to what Zach just did. I didn't want to say Bitcoin because that's not a stock. So yeah, they said the Grayscale, you know, that's fine. The Grayscale Trust. So I'm going to say MicroStrategy, right? So MicroStrategy, which could be seen as a proxy for Bitcoin, right? And we've already talked about this quite at length, right? It's not in my portfolio because that comes with additional risk. So I would much rather invest in Bitcoin. I think it's already leveraged enough intrinsically, Bitcoin. But it's something that I've been reading about, and something quite interesting, as Zach was saying. Once you establish an ETF, you need to secure the supply, right? And what's the company in the world that's got the most supply? after the exchanges, right? So Coinbase, etc., right? It's bloody MicroStrategy. So could we see perhaps an attack on MicroStrategy and potentially just some sort of takeover, right? Because that's possible, right? You need to secure the supply in some shape or form, and if you can't get it OTC from Coinbase because they've run out of coins, right? And you don't want to move the markets by 20% just for securing your stash, then where do you go? So that's an interesting play. And I think I'm actually gonna be accumulating in my private portfolios because, as I said, it comes with additional risk, and it's probably not worthwhile for my investors to take on this additional risk. It's just for the degenerates like myself in my private portfolios.
Yeah, but would 𝗏𝘂𝗃𝗃 ever sell any Bitcoin?
No, it won't. It won't. It will be buying more.
Yeah.
But the question is, does he want to hand over the reign of his company? Maybe not this year, maybe next year, but it is something interesting to watch, right?
Yeah, I think MicroStrategy is a slight leverage play. I think it's likely to outperform Bitcoin as long as the markets go up and there's a bull market, and it's
in a bull market it will
underperform Bitcoin during a bear market.
Yeah.
But obviously you do have extra company specific risks that come with that, right?
Yeah, and to be fair, like they say that they use the cash flow to buy Bitcoins, but are they profitable? I don't think so. I know that they're investing in new lines of business, right? And if they can manage to shape their offering Bitcoin and Bitcoin for corporations, that's going to become very interesting. Yeah, but so I like the stock.
But the only thing I wonder on MicroStrategy is if they will still perform just as well when people have access to a Bitcoin ETF, because as you said, that people have been using it as a proxy, and they won't have to have that proxy anymore. We'll see how it goes, but I don't think it's a bad bet to have in the market.
No, and BlackRock has already taken a position in BlackRock in MicroStrategy, and BlackRock is not doesn't do things random. If they could wait for a Bitcoin ETF, they would have. But they've already taken position in MicroStrategy, and as I said, what if they come up with new product offerings centered around Bitcoins for corporations, right? And then in the future, we'll find out the corporation want Bitcoin in the balance sheet. So it's not just about holding Bitcoin; it's also about the services that they offer.
Yes, correct. Okay. Thanks, Davide. It's really interesting. So I guess I'll come on to myself. I think everybody else has spoken. I'll move off the subject of crypto and Bitcoin entirely, and I'll go to what is a fairly boring stock, but actually quite interesting for me. And that is a company called Ambev, based in Brazil. It's actually a subsidiary of Anheuser-Busch in the US, but they operate in Brazil. I'm pretty bullish actually on the Brazil market as a whole. The Brazil market as a whole did, obviously, because Brazil is quite a commodity-based country, and the fact that commodities obviously did really well last year, etc., it's provided a lot of inflows of money into Brazil. And basically Ambev is a brewer of mainly beer, but they also do some soft drinks beverages as well, and they are the manufacturer and brewer of Brahma, which is a big Brazilian beer, Stella, and a few other beers that they sell around mainly South America and Central America, in Canada, a few other places. But the main market, and they're also the supplier of Pepsi Cola. They have a deal with Pepsi Cola to supply Pepsi around South America. So it's a really growing company, and it's doing really well. I think out of the last 10 earnings reports, it's beaten its earnings 9 times out of the last 10. So it's a pretty consistent performer. And they have a very large market share in Brazil, which is good and bad, right? So it has a large market share in Brazil. I think it's around 60% of the market share for beer and beverages. And some could say they might not have much room to grow in Brazil, but they already have a really strong foundation, and they're growing the EBITDA on a year-on-year basis. And they also have a lot of opportunities to move into and build up their market share in other countries, especially in South America. So Argentina is another big focus area for them, as well as Canada, Mexico, and a few other countries as well. I don't think it's extremely undervalued. I'm not going to take that point that it's really undervalued, but it's a very steady performer. And I really like the tailwinds that are happening, especially in Brazil, but also in the rest of South America. And I think that does have some upside to it further in my portfolio, even though I think I'm 25% up on the position so far since I took it last year. So bit of a different stock to end the chat.
Okay, this one will be fun. As you all know, now eToro has introduced 0% fees for shorting the market. So now we have access to leverage that we've never had access to before. So now this brings an interesting question, right? Now we have access to different strategies that we've never had access to before. So the one I'm going to bring up is going to be long the SPSV, which is the short-term corporate bond ETF, and shorting the TLH, which is the 10 to 20-year ETF. So the thesis is this, right? The yield curve is so inverted to the point where it does not quite make sense. If it returns back to normal yield curve, the short-term bond should, in theory, outperform the medium-term bond. So you go long the short-term bond and short the medium-term bond, and the ratios are going to be weird because of the way that duration works. But that is the thesis. So I want to blow this up and see if anybody comes back with any comments on this.
Zach, it makes sense, right? But then how much capital do you actually need to deploy in order to make a 0.5 or 1% difference, or even 5% of it? I don't know, 2 years. How much capital are you locking away, and what's the cost of capital, right? But yes, in theory, it does make sense. But what's the spread that you're going to get?
Yeah, so this is the ratio parts are the interesting parts, right? How do you calculate the ratios and what makes sense to it? But now we're allowed to leverage, right? So the leverage now you're offered is 5 times. So if you think about both positions, you're allowed 2.5 times leverage. Does 2.5 times leverage make sense? I don't know. I haven't done the math. I'm just bringing it up. See.
Yeah. I think once you use leverage, you're also obliged to put a stop loss in the position there.
Definitely.
So if you use 0 leverage, probably not. Yeah.
But how do you stop loss on that? You can't really stop loss on that, right? Because now you're doing a spread trade. So if you do a spread trade, how do you stop loss? You have to account for both sides, which is impossible.
Yeah.
So I thought it was an interesting one. I'll just bring it up. See whether anyone has any comments.
Yeah, it's quite interesting. It's quite interesting, but I don't know, with those types of trades, I always see the opportunity cost of getting involved in them. So you, as Davide said, you have to tie up a lot of money to make very little. Obviously, the risk reduces because you're pretty hedged, right? But you also tie up a lot of capital for a little gain, especially when the markets are purring like they are at the moment. But it's definitely very interesting to think about, and it could be very good for the adverse risk type of investors, or people that would just want to make a kind of a bit of a yield on their money, a small couple of percent increase on their money, barely risk-free. Okay, so thanks very much to all the panelists for joining. I think everyone will agree we had a really nice discussion and we talked about a lot of informative subjects. I hope the listener enjoyed it, and I thank you very much for listening. Subscribe if you haven't already, and please like this video. and we wish you a great week ahead. Thanks very much, everybody, for joining.
Thank you, guys. Have a good weekend.
Thanks.
Thank you.
Bye.